So, here's a little secret. If we had stuck to picking stocks and following questionable advice, we'd probably still be working those long 9 to 5s right now. But instead, we're enjoying early retirement and living our best lives. The secret? It's not some flashy scheme or get-rich-quick trick. It's index funds. Sounds simple, right? But there's more to it than just dumping your money into a fund. We'll show you exactly how it worked for us and why it could be a game changer for you too. And stick around until the end. We'll reveal that one key decision that can make or break your path to a comfortable retirement. And trust us, it's simpler than you think.
Hey friends, welcome to our channel. I am Dharavi.
I'm Jason.
We are both north of 40 years old, and this is 40 North Finances. We are all about helping you achieve financial freedom. We retired early at 39 with a 7-figure portfolio, and now we spend most of our free time traveling and living life on our terms. On our channel, we share what worked for us in the hope of inspiring you to pursue your own path to financial independence. If having the time and money to do the things you want to do in life is important to you, make sure you subscribe to our channel. You can also sign up for our free newsletter, and we will send you our free ebook, The Fire Starter Guide, How to Achieve Financial Independence and See the World. Just look for the link down below in the description or go to our website, 40northfinances.com. And if you have any questions, leave them in the comments below. We are here to help.
All right, so let's talk about index funds and how they helped make us millionaires. And let's keep it simple. Think of index funds as a big basket of different stocks. Instead of trying to pick the next big winner, you're buying the whole basket. If one stock flops, you got plenty of others to make up for it.
Back in the 70s, a guy named Jack Bogle had a revolutionary idea. Why try to beat the market when you can own all of it? And just like that, index funds were born. Turns out, playing it safe and steady is what really wins the race.
So, how do these index funds actually work? Well, when you invest in an index fund, it automatically buys shares of all the companies in a particular index. For example, if you invest in an S&P 500 index fund, you're getting a piece of the top 500 companies in the US. That means you don't have to worry about which of those companies are doing well or which ones aren't. You're invested in all 500 of them.
And S&P 500 fund holds shares in companies like Apple, Microsoft, Amazon. If these companies grow, your investment grows. If they don't, your investment might just not grow as fast. But you're still covered because you have got exposure to a lot of other companies as well. By spreading your investment across many companies, you reduce the risk of any single company dragging down your returns. It's simple, yet powerful strategy.
When I got my first job out of college, I was pretty sure I had it all figured out. I started dumping money into my 401k, following the advice of the so-called expert, the guy who represented the investment company for which my employer chose to set up their 401k. He told me to buy these expensive mutual funds, and back then I didn't have a clue what a load fee was. I just knew that I was paying them. And in case you don't know what a load fee is a sales charge or commission that you pay when buying or selling certain mutual funds. It's basically a fee you pay to the person or company selling you the fund, either up front when you buy the fund, called a front-end load, or when you sell it, called a back-end load. Now, index funds typically don't have load fees, which is just one of the reasons why we love them. Then, like a lot of you, I got a little too confident and thought that I could pick stocks on my own. Well, spoiler alert, I lost money. Big surprise, right? After a few years of trying to outsmart the market, I finally stumbled across index funds. And that's when things started to finally turn around and make sense. If I'd known about them from the start, I could have saved myself a ton of stress and a whole lot of money.
My path was a bit different. I grew up in Cambodia, where the safest bet was fixed-term deposits, kind of like what you call CDs here in the US. They were straightforward and they paid decent interest. But when I moved to the US, I had to learn a whole new game. That's when Jason introduced me to index funds. Now, my IRA is full of them, and honestly, it's the best financial move I have ever made.
Look, we've all been there, paying too much in fees, stressing over which stock to buy, wondering if we're saving enough. Most of us, myself included, try to beat the market and end up losing. What I learned, for me at least, is that trying to pick individual winners is no different than gambling. The truth is, if you want to be a successful long-term investor, you don't need to beat the market. You just need to match it. And index funds let you do that without the headaches. Now, you might be asking yourself, why should I settle for just matching the market? If I just get an average market return, won't I end up simply being average? The answer is because over the long term, the market has historically averaged around 7 to 10% annual returns, even after inflation. That's enough to turn consistent investments into a serious nest egg. The real trick is consistency. Let your money grow steadily without trying to outsmart the market. We keep it simple. We track the market, keep costs low, and let time do the work. It's not flashy, but it does work.
Now, not all index funds are created equal. As we mentioned earlier, some focus on the S&P 500, which are the top 500 companies in the US. Others, like total market funds, give you a piece of nearly every public traded company out there. This means you are getting a slice of both the big names, the smaller, up-and-coming companies. The idea is to spread your investments wider, so you are not putting all your eggs in one basket. You might think more is better, but not always. Some of these funds have higher fees or just don't perform as well as others. That's why you have got to be smart about which one to pick. For us, a whole or total market fund made the most sense. For example, if your brokerage of choice is Vanguard, you might want to choose to invest in VTSAX, which is Vanguard's total market index fund. But since we're with Schwab, we use VTI, which is basically the same thing, just in ETF form.
Look, I know some of you watching may not understand the difference between VTSAX and VTI. So let me break it down as simply as possible. VTSAX is a mutual fund, while VTI is an ETF, an exchange-traded fund. And in a future video, we'll go into more about the differences between a mutual fund and an ETF. But for now, in simplest terms, VTSAX and VTI both track the same index, the total US stock market. And therefore, they own all the same stocks. But the key differences are how you buy and sell them. VTSAX has a minimum investment requirement of $3,000, and you can only trade it once a day after the market closes. VTI, on the other hand, can be bought and sold like a stock throughout the trading day with no minimum investment. Yet another reason why we prefer VTI over VTSAX. Another thing to consider is where you're investing. See, not all brokerages are created equal either. You want to look for one with no trading fees or minimum balances. We personally like Schwab, but Fidelity, E-Trade, and Vanguard are also solid choices for index fund investing. But here's another cool thing about VTI. Since it's an ETF, it trades just like a stock does. This means that you can buy it no matter which brokerage you use. And sit tight, we'll explain why that matters.
It sounds too good to be true, right? Just set it and forget it. The real challenge isn't in finding the right fund. It's in sticking with it and not getting tempted by every market dip or hot stock tip. If you are going to be investing in the stock market, you need to be able to weather the storms, all of the ups and downs that come with the stock market. Given enough time over a long enough period, history shows us that staying invested for the long term is the surest way to growing our wealth. So why did we choose VTI over everything else? And how did that one choice help us retire so early?
Look, here's the bottom line. Index funds were our ticket to financial freedom. We didn't start with a big inheritance or six-figure salaries. It was just consistent, smart investing over time. In VTI, that's been our golden ticket. It's a low cost, it's diversified, and it just works. Think of it this way. Every day, there are millions of Americans who wake up and go to work for every publicly traded company in America. By owning VTI, we own a tiny share in each one of those companies. That means that those people are going to work every day for us. Also, by owning VTI, we don't have to worry about which sector of the economy is going to go up or down in the next 1, 5, or 10 years. Whether real estate, commodities, healthcare, tech, or agriculture goes up or down, it doesn't matter to us. We don't even have to think about it. By owning VTI, we own them all. It makes investing in the stock market as simple as it could possibly be.
But beyond the money, what we really gained was freedom. The simplicity of our investment strategy meant we had more time and energy to focus on what really matters, living our lives. Once we stopped overcomplicating things, everything else just fell into place.
And if this resonates with you, don't just think about it. Take action. Start by learning more about index funds. Pick a reliable brokerage and get started on your path to financial freedom. The path to financial freedom is straightforward. It's about making smart, consistent choices. And guess what? You don't need to be a financial genius to do it. So get started today and trust us. Your future self will be very grateful.
If you enjoyed this video and you haven't yet seen our video about our journey to early retirement, you might like to check that out over there. And if you've gotten to the end, we would love to hear about your personal FIRE journey in the comments. We know each person's story is unique, so we would love to hear about yours. But yeah, check out this video if you want to learn more about our journey. Thank you so much for watching. We will see you next time.